Hey friends, this is Martin from CUES, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at technical charts and then try to understand what happened in the market during the previous week and also plan for a better trading week that's coming ahead tomorrow, starting from tomorrow, April 7th, Monday 2024. Let's deep dive into the charts first. Here we go. So this is a weekly and daily on the right side view of Nifty 50. So we can see that it's in a parallel trend line. It did retrace more than 16.5% nearly, and then it showed a very decent and quick reversal to the upside. It seemed like the bottom was found, but the last week's not exactly last week, the growing concern of the tariff tree of the Trump has come in the last January, has once again hit the market, and it was expected because it was getting implemented from April, and that resistance got hit there due to that fundamental reason, and then market has formed a tri-star pattern of shooting star with a gravestone doji after a very big wide range green candle followed by a red candle, so 3-star bearish pattern. And it is exactly reversed from the top of that parallel trendline channel on the weekly charts I see, and that's what it is. So right side we see another parallel channel on the daily short term, and it seems like it is already heading towards the journey downside, and that's it. Banknifty was an ascending wedge, and that also seems to have found some bottom and reversed beautifully. But contrary to what you see on the weekly charts for Nifty, Banknifty is showing a consolidation of an inside bar with a green that was actually it is not closed green, it has closed negative, but it's flattish, so it's a consolidation week for the Banknifty has not been impacted by all the volatility, all the crackdowns that are seen in the Nifty. That's a surprising story. And on the right side you have the Banknifty's daily chart, so you can see that Banknifty was on the upward journey, and it is finding some resistance, and it was a truncated week last 4 days, and it was mostly on the upside with a flattish close ending. Very volatile though. So that's the story about Banknifty. Banknifty showing resilience more than the Nifty when Nifty is cracking down, unable to take the fundamental tariff war, that global CUES that's floating around. And let's summarize what that happens. It's 620 points down on the Nifty. That's 2.63, and look at Banknifty. It's just flat 60 points down. That's all. That's the thing that you are watching for. So remember, it's both of them are below the 220 or this exponential moving average on the Nifty, but in the Banknifty it's above all of these 200 exponential moving average. It's above that. So Banknifty is concrete as of now. We don't know what will happen on Monday because post the market closure, the US markets on Saturday had nosedived, and then Banknifty also may follow, but as of now Banknifty is very contrary to what the Nifty is showing. So Nifty basically flipped down and lost 2.63%, one of the biggest falls in recent times, and we just had 16.5% correction after 72% of rally. So you don't need to be surprised if more corrections are on the way. Banking index is not even corrected that much, so 12.45% is correction after all this run since from the all-time highs. So that's the story. Right, let's move ahead and try to understand what the candlesticks are talking about. So it's wide range bearish candle on Nifty, definitely bearish, and a tri-star shooting star pattern is coming out, which is indicating that more downfall can be expected, and wide range bearish candle again on the Friday when it cracked down. On the contrary, the candlestick that you see is a spinning top inside bar, which indicates some kind of consolidation, flattish close, indecisive close is what Banknifty is having on the weekly, while a bull trap bearish reversal is what you see in the Friday candlestick, daily candlestick pattern. So in effect, Nifty was sliding down from beginning for the first day and the end day, right, of the 4 days of trading. In the middle 2 days it tried to recover a little bit, but it sustained. Well, Banknifty was showing much more resilience, which attempt to move up most of the days, and finally getting flattish. Another study of the Bollinger Bands are showing that, look at this candlesticks once again, right? The tri-star bearish pattern on Nifty, while consolidation pattern on Banknifty weeklies, Day before days it is down, it was up, and it is a bank. It was down in the Nifty. So what I meant, Bollinger Bands is showing contraction of the bands, although it is high volatility expected considering the distance from the median of the Bollinger Bands towards the top and bottom. So high volatility can be expected, but its Banknifty is bearish biased and it's consolidating it sideways. Right? It's bearish bias, so consolidation can be expected in Nifty with the bearish bias, but it's not expansion and downside. It's a mistake that's mentioned here. I'll just correct that right away. So it's Bollinger Bands contraction actually, but it's bearish bias indicating price sideways. Alright, sideways move, right? Well, that's not the case with the Banknifty. Banknifty, it's expansion on the upside with bullish bias. So that's the difference between the two. The contradiction in the Bollinger Bands and the price all indicates Banknifty is much more bullish and stable as of Friday, not as of Saturday. We don't know. We just have to wait till Monday morning to see how it reacts. But as of now, that's what the story is about. Let's move ahead and try to understand the momentum and the trend indicators. We're using the RSI momentum indicator and we're using ADX for the trend, and we're studying both the indices on both the time frames, the short term daily and the medium term weekly charts. Left side I have weekly charts, which indicates it's sideways still on the medium term on both indices. Momentum is sideways, but the Nifty it's sideways and falling, the Banknifty sideways and rising. While on the short term you have a falling sideways in the case of Nifty, but Banknifty is still bullish, can you believe it? So overall you can say it's sideways and falling. You can see Banknifty is much stronger with respect to the momentum. You can see this. It's snapshot of that here as well. So this is a summary. It's a sideways falling, and bullish falling is the momentum on the short term, on the medium on the short term, and the medium term it's sideways. So both are falling momentum. So trend indicator ADX is actually bearish in the case of Nifty, but in the case of Nifty, Banknifty, it's bullish. So that's contradiction. The momentum, Bollinger Bands, price pattern, candlestick, and everything. Banknifty is resilient and showing strength, which is only hope the bulls have going ahead. Now let's look at the India VIX, the fuel and greed indicator, which has spiked up 8% last week, but still it is not crossed in the medium term. It's still in the almost 13.6. So that spike indicates the fear that has come in the market due to the global news and political news. Let's now try to understand what the opening interest analysis is showing. It's definitely a short build-up that you see on Nifty and the Banknifty on the futures open interest high. Now for the options on high for the April 9th Nifty and April 30th Banknifty's month expiries, there is a contradiction between Nifty and the Banknifty PCRs, the put call ratios. Also, it's a bearish PCR below the 1 at 0.6. That's very bearish in the case of Nifty, but on the Banknifty, look at this contradiction there. It's a bullish. So II also is following the same pattern. Now using the open interest, you can also try to understand the tentative levels of supports and resistance based on the put and call writing that is there. So Nifty is showing that 22,500 is where the highest support is there, and 23,200 is where the highest resistance is. The second highest support and resistance is at 22,800 and 23,000. Banknifty has a very wide range where the highest put and call writing is that support is in 50,000 and 53,000 is where the very wide range. So Banknifty that there also is more strong with respect to the resistance support levels. Second highest Banknifty support and resistance levels at 51 and 52,000. PCR and futures high, we already see that it's bearish short-term futures high, while the options high is contradicting the bullish Banknifty as compared with Nifty. Now the support resistance that can also be found from the charts. Look at this Nifty HP daily charts. You can see that it has breached that support zones of in the Fibonacci 61 and the 20 exponential and the 50 exponential moving average zones, and then now it's sliding down. So first support can be the gap that's seen at 22,577. If that is breached, it goes to the Fibonacci 78 at 22,340, and in the previous swing lows at 21,964, 21,792, and the 21,710. Likewise, those are the support zones on the Nifty. Upside, the first resistance can be seen at Fibonacci 60 at 23,154, where it's very close to the 20,100 and the exponential moving average daily also. And No, the 50 and the 20 expansion moving average. 100 expansion moving average resistance would come in at 23,373, and then 200 expansion moving average resistance would come in at 23,630, and 23,800 you have the previous lows where it reversed from. So that's the resistance, and after that you have it 24,000 resistance, and then 24,226 previous swing highs, and likewise it goes up. That's the resistance in Nifty. Banknifty is having almost the same support resistance as previous week. The first resistance will be 52,000 rounding number, which is got the previous swing high as well. After that, 52,583, and then 52,807, and then 53,000 rounding number. It's also a previous resistance zones. Downside support will be a gap, and the previous swing was at 50,672. That is breach. We have a confluence of three moving averages of 200, 100, and 50 and 20, all of this coming in this zones of 50,453, 50,404, 50,286, and 50,165. So 50,000 comes after that is a major support. And now if that is breach, Fibonacci 61 is coming at 49,269, and that is breach. We have a gap at 48,481. And then the previous swing lows comes in as low as 47,850 and 47,690. So that's how the Banknifty is listed in the program. So then some mark here. Make a note of all these, correlate that with what the levels indicated of the options are, and then try to find where to place your bets. Now let's try to also understand what happened with different sector indices. Luxembourg IT sector has slid down 9.1%, and look at metal, 7.5%. Big fall in these two sectors. So no way you can go along on that. So probably investment options can be pursued on SIP more at these two sectors. Badly hit last week, especially IT especially has fallen down after the US market had down. Again, further fall down from here. It has breached a major support zone. We see that IT has breached a major parallel trendline channel and then falling down towards another support zone. Metal also has had formed some bottom of the parallel channel. Once again, it has fallen back and given up all the gains, and IT is in bear zones on the medium term, while metal is still trying to hang on the sideways. So IT badly hits sector that has gone with the bear zones. Auto is also having trouble but trying to hang on the sideways. Pharma is similarly not trying to hang on sideways, and FMCG also trying to hang on the sideways after finding some bottom in the parallel channel bottom. Reality climbing into sideways and trying to manage there. So what has hit really bad is the IT sector and the metal sector, but auto is 3.3% down, pharma is 2.8% down, FMCG is flattish. That's all the sector. Look at FMCG, the charts on the right corner top. That's all the sectors that showed some green, and that too flattish green. That's the story about. Reality is 3.4%. So every single sector index is showing deep trouble, the major ones. Let's move on and try to understand what does the industry heavyweight, not the industry, index heavyweights, the heavyweight stocks that contribute maximum to the indices of the Nifty and the Banknifty. So HDFC Bank, the biggest contributor, is showing green, and that's why Banknifty is stabilized. It is almost bullish, you can say. It's just trying to climb back in the bull zone once again after small retracement. Then it's very close to the all-time high as well. So that's all the hope. The Banknifty and the HDFC Bank is all the hope that's there. Lines, look at this wide range fall, but still hanging on. There is another divergence that's there, which could indicate it could find a support at this 200 zones, and again it could bounce up. That's another option which we buy. As soon as this is breached, we have deep trouble. Parallel trend and channel is breached. Now, ICICI Bank, the evergreen, ever bullish, is also very close to all-time high. Nothing much is happening on that as well. ICICI Bank, the third largest contributor, is also not bad, although it's not a green. It's an indecisive close that is happened, but it is very close to the all-time high. So look at now Infosys. It's breached that couple handle pattern and then falling back in the bear zones only. TCS also in the bear zones, and wide range bearish candles on both, and momentum trend, everything is negative. IT sector hit badly. This is what contributed to the fall of the Nifty, and this HDFC and ICICI Bank is what is stopping the Banknifty from falling. And look at Kotak Bank, that is also very good. Red candle, but it's in bull zones and with respect to the moment. ITC also from FMCG is trying to hang on the side. So IT is the biggest trouble. IT and IT alone, right? Yeah, Reliance also has good feedback, but it's fine. It is given the gains of last few weeks. That's all. but banks are doing good and IB is doing really bad. That's the story. And broader markets, mid cap and small caps, are also giving us some of the gains of the recovery and then hanging on this sideways momentum. At least it's not found the base, I'm saying, but it can happen next week if there is further slide down in the Nifty. So broader market is miscap. There's still signs, not bearish. Bulls can have a sigh of relief, just waiting for anticipating whether it will fall down further or not. Right. That's about the different sectoral heavyweights and indices and stocks now, and the broader market stocks. Actually, let's no more had to try to understand how the institutions participate in the market. Like, it is wrong. What I said, it's negative 13,000 crores for the last 1 or 2 weeks. I think just 1 week. After a very long time, FIs had turned buyers, but FIs were selling 13,000 crores last week once again, and it's just 5,000 crores. It is triangular week, but DS managed to buy only less, and now it is sliding down. We have a net longs that has moved down from the institutional participation point of view. So FIs back to selling is not. How long would DIs hold the market is the question. Now let's try to understand the global market, which is primarily the US market, and the global commodities and currency. So dollar index has slided down 1%, supposed to be good, but there are other impacts as well. So dollar sliding down after the Trump reforms and rate cuts and all this dilemma that the US is facing after 24 has begun in April. And the USD INR is what we are concerned about. It is slightly flattish, flat, you can say, but it's now it's fallen down from that 87 levels to the 85.08. But even then, the rupee is very, very weak, right? So not much difference there. But dollar has slided down 1%. Crude oil is very important for emerging markets like oil importing countries like ours. Has fallen down 10%. It's 62.27. How these are destroyed, so no more trouble on the oil, and those are the fundamental reasons. And that's about the oil. Oil is the cheapest, but better prices has not been cut short. But oil is going down, would help our economy in some way or the other. So there is not much worry with respect to the used currencies and oil, but gold has closed 1.6% down, while the market is also falling down, which is not something that usually happens. When the market is sliding down, usually the gold gets bought, and especially in the US dollars. This is something contrary that has happened, but just have to accept that, because it's nearly 90% of the rally is what we have seen for the last week on the gold. So gold has always been hedging instrument, so usually it rises up and the market backs down, because there could be a shift in the options, so that people try to invest from liquidity markets towards the yellow metal. Now comes the US markets. Before that, let's see where the crude oil is. Crude oil has been hitting the trend, respecting the trend line parallel channel since long time, and it's near to 60. It's 62 is one of the lowest levels of the oil that you can ever imagine. It is found in the bear zones with respect to the momentum as well, with rising bearish trend on the oils. And gold also, you can see that it is new all-time high, about 3,130, 140, 50, that range, made new highs and then met the resistance and small pullback. That's how its bullish momentum, its all-time highs. Keep that in mind. And global market, this is where the drama has all happened. Look at that candle that has dropped. That's how much percentage? 7.8 and 9% Nasdaq is what you're seeing here. Right, so 9 to 10% of fall in a week on the mother market is definitely going to impact all the other markets in the world, including ours. Just keep in mind, ferocious sell-off after the trend triggered the trade war in other countries, reacted to it, and Fed chairman raised concerns and then stopped with the rate cuts and all that drama that has been happening last week. So deep trouble. This gap down could lead to gap down is definitely in our markets also on Monday morning. So that's the markets reacting violently. There is volatility that's going to spike up. There's going to be gap downs. Option traders who are better at not anticipated this kind of fraud probably may have trouble next week. let's conclude on the global cues, which is bad with respect to the US markets, and okay with respect to commodities. And let's move on and try to have some actionables. So just walk with for the expect ICICI Bank has very tight stop loss despite all the drama. Nothing is happened. ICICI Bank, it's making bullish momentum. There is a range shift momentum, range shift concept, which is again bullish in nature. So notice it's very close to the all-time high. You have tight stop loss with the low of the current week's candle low, and then take a bet. If there is a lot of space, if the market reverses, it can go and give a very good risk-reward trade. Now, the contrary, Tyler Alex is the IT company, not a software, but IT embedded systems and all that engineering side. Because of this tariff loss, there is a probability that it can correct substantially, and they already done that. It has breached the main support zones, and it is in the bear zone with respect to the momentum. And trend is bearish day by day, week by week, and so we can take a tight stop loss when it's to risk-reward trade. Have tight stop loss, you don't know in the market. When its correction has exceeded 20-25% on the ID index assets, so then you could find some more support. So have tight stop loss and trail your profits as a more if all it's moving in your direction. So it's a one trade on the long side, that's on the ICICI Bank, and one trade on the downside on Tata Alex. And remember, these are trade recommendations. These are case studies for you to learn to put in your money, or do mock trade is up to you. To put in your money, you have to analyze, understand the logic, accept or deny what is being shown based on your reasoning, and place your bet based on your risk appetite. It's your money, your risk. This is not trade recommendation from me at all. Keep it out that time. Let's move ahead. Another actionable similar nature is the F&Os. Is on the F&O Nifty 50. This is a call ratio spread. Ratio spreads are double selling and then one and audience, and then one side protected. So basically, you're selling a call option of OTM call option is twice as much as what you're buying. Again, 50 points lesser OTM. We are buying as a hedge half of that. So we will not make much profit if the market falls down, but we will not make loss also. When the market breaks out and reverses and moves substantially up above the 2300, we may have trouble. So probability of profit is more than 85%. So it's kind of hedged on one side, you can say. Requirements estimated margin requirements are a little less. It's not completely hedged, keep that in mind. There's a call ratio spread on the Nifty weekly expiry for the next April 9 is what you see. Keep in mind, next week also is 28th week. A lot of holidays in April. Check on that. One on 10th next week, and 14th, and then another one by the end. So keep that in mind. Time to wrap up. We have a market that cracked down after an attempted reversal on the previous week, which failed to sustain, and then it looks like it's heading towards the retest of the previous lows, where it made the 16.5% of correction, and finally it closed negative and lost momentum in the trend, and then it started selling off with the bad global cues, and then we have trouble. Let's try to put together different parameters in favor of bulls and bears. Bears seems to be having more. Let's look at that. The FIs are back to selling. It's bearish. India VIX is rising. There's fear in the market. While there's bearish candlestick patterns on the Nifty. Bearish momentum, a bearish trend is seen. Not bearish actually, so momentum is falling actually. In the sense that the momentum gains are falling. Right? Trend also is Banknifty is fine, but otherwise it's short-term bearishness that's seen on trend indicators. We've already seen that IT sector is deep red. Right? That sector used with defensive play. No, it's no longer that. That's where it's getting hit badly. And then if the options are PZR is bearish in the case of Nifty. News market is deep red. Gold is at new highs, very close to new highs, already pulled back last week. Lower low, lower high patterns. 10% from the channel top. A lot of space to go down to the channel bottom. Nifty is below 20 and 200 exponential moving average. Most of the major sectors have fallen to the bear zones. Most of them, not all. Lower markets, mid cap, small cap also has lost the momentum and hit. Range bands, downside expansion is that's not correct actually. There is a bearish bias, that's all. The bands, bearish biased. Right? So there's no expansion on Nifty yet. it's a correction. Now let's try to see what's in favor of the bulls. Banknifty is the only thing that the bulls have to hope for, because Banknifty options rise bullish. Crude oil, the Banknifty is above the 20 and 200 expansion band. Banknifty momentum is bullish. Bollinger Bands are upside expansion. No, and these are all Banknifties. Banknifty is what the bulls will be holding off for next week, if at all they have any hope. But yeah, sideways momentum, right? And major heavyweight stocks, oh yeah, they were sustaining. We've seen that when we studied the different sector indices, we understood that it's the IT sector and metal sector that looks really bad, and the bank sector is doing very good with respect to heavyweight. So keep that in mind. And world markets still not falling to the sounds of it lost a lot of momentum that it gained. So this is summary of what is it. So the bears are overweight. It is bearish overweight that clearly can be seen with bucket over different parameters. But the market surprise, we always keep that in mind. There's US tariffs, trade war that's going on, and US heading towards recession news, and all these dilemmas are there. And technically charts could go for another gap down and continuation of corrections to retest of the extreme lows, or even breach of that as well. So my market view as per the charts is moderate bearishness. So always keep that in mind. Technical charts will go for a toss when there is a black swan event like a war, pandemic, recession, trade wars, and interest rate cuts, and all these things. So which gives it surprises market. So things get exaggerated, overreactions could come in, and then it takes away your stop losses, and then that's it. Just have to accept that, especially on a Monday morning after 2 days of uncertainty and fear. Option and derivative traders will have deep trouble managing their portions. So for the next week, 22,000 and 23,500 is where the levels are there, with highest support resistance can be seen, and 48,053 is a very wide range that Banknifty is foreseen, although it's bullish. It continues to be in the bull zones as compared to the Nifty. So that's the level. So keep that in mind. 26,000 is way above there, and 54,000 as well. So unless we reach there, we still either correcting further or consolidating. That's what is happening. Now keep that in mind. We're playing in derivatives and options. Hedging is a must. Hedge your portfolio, hedge your positions properly, so that your risk is managed, and risk management is all the thing about in trading. So manage the risk, and you can also make some money, rental income, using risk using the option strategies and options and all that, using hedging also. We'll check out the playlist for more details on that. But yeah, the bearish market ahead is what is looked upon. Corrections may continue. A retest of the previous lows could happen at least, and global gives them great. That's all I have. If you like, you can subscribe. If you like the content, you can hit the like button as well, and then comment and share it to others. I'm active on the X, where I post regularly technical analysis and things like that. So you can subscribe to that as well if you want. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.